is on pre-shipment, post-shipment financing. Okay, so we'll be conducting it now. Watch the video till end. It's very useful for you throughout your banking career as well as in the CAIIB exam. So let's start without wasting the time. When obstacles arise, you change your direction to reach your goal. You do not change your decision to get there, right? Download Adda 24/7 app on your mobile to get the updates on various banking exams as well as the study material and video lectures for various banking and other government exams. Okay. Use this code Y432 to avail flat 77% discount on your Adda 24/7 app on various materials. Okay. So let's start with the case study. And this case study is very big. Okay, this case study is of 3 slides. The question is of 3 slides. Okay, an exporter approaches the popular bank for pre-shipment and post-shipment loan with estimated sales of 100 lakhs. So he has approached the bank with the sales, means total his sales are 100 lakhs. The bank sanctions 50 lakhs limits with 25% margin for FOB, means pre-shipment, 25% for pre-shipment, and 10% on foreign demand bills and 20% on foreign usance bills. Means this is related to, suppose if there is a demand bill separately or usance bill financing separately, then it is used. The firm gets in. Now up to this part, question is first section of that question. Means now limits are sanctioned. Now second part. Now the firm has got an order. The firm gets an order of USD 50,000 CIF. CIF means what? Cost, insurance, and freight. Follow my Incoterms video. Okay. And to Australia. On 1/1/2017, when USD rate, USD to INR rate was 66.80 per USD. Okay. So rate is given for USD. Okay. The firm approaches the bank for releasing pre-shipment credit, which is released on 31/3/2017. The firm submits the documents, submits the export docs drawn on side bills for USD 46,000. So remember this. On 1/1/2017, pre-shipment finance is sanctioned. Then the rate was 66.80. When only one rate is given, 0.80, and this oblique second is not given. So you take same rate for buying and selling. Okay, so pre-shipment, this is the rate. For post-shipment, USD submitted the docs on what? 31/3. At that time, what was the rate of the Forex and what is the amount of post-shipment? See this. Submitted the docs. So these docs are of 46,000. So for post-shipment is sanctioned for 46,000. Okay. Remember always, pre-shipment is sanctioned with a margin, 25% margin. Okay. And post-shipment is always sanctioned 100%. Remember this. Okay. Keep it as a thumb rule in your life. The bank purchased the documents. Now this is, we are talking of post-shipment. The bank purchased the docs at 67.25. Means at the time of post-shipment finance, the rate was 67.25. Okay. So get it. There are 2 rates now. One is for pre-shipment and second is at the time of post-shipment. Adjusted the PCL. That's obvious because when you sanction the post-shipment finance, first you close your pre-shipment finance. Okay. Always. And credited the balance amount to the firm's account. Okay. So this now this is the third part of that problem. First part was sanctioning the limits. Second part was pre-shipment finance. Third part is post-shipment finance. Such big is the case study. And we have also the fourth part. So 67.25 adjusted the PCL outstanding, credited the balance amount to the firm's account. After recovering the interest of NTP. Means after all the adjustments. What is NTP? 25 days NTP generally. Okay. Now this third part is over. Now the fourth part. The documents were realized on 30/4/2017. Means the buyer in USA or wherever, whichever country, he paid on 30/4/2017. When was the post-shipment sanctioned? 31/3/2017. When was the pre-shipment sanctioned? 1/1/2017. When are the documents realized? 30/4/2017. After deduction of foreign charges, bank charges of 450. So bank deducted these USD 450. The bank adjusted the outstanding post-shipment advance against the bill. So after adjusting everything, it may have given the funds back to the customer. So case is clear. There are 4 parts to it. 1, sanctioning the limits. Second, pre-shipment finance. There the rate is different. Then third, post-shipment finance. There the rate is different. And last, this is the realization means funds have been realized. Now we have to answer the questions. Such big is the case study given. Either this or a part of this may be given to you. Only first part may be given to you. Only up to this pre-shipment. Or only second part may be given to you. Or only this last part, third part, fourth part may be given to you. That realization, which rate will you apply? Okay. Bank charged the interest. Now this is the description. Bank charged the interest for pre-shipment loan at 7%. So pre-shipment was at 7% up to 90 days and 8% over 90 days up to 180. So our loan was for which period? Up to 90 days, 7%. So let's see. We'll see that. Okay. So for post-shipment, the bank charged interest of 7% for demand bills, 7.5 for usance bills. Okay. So this is clear. Pre-shipment 7% for 90, 8% from 90 to 180. Post-shipment 7% for demand means site and 7.5 for usance. Okay, up to 90 days. And 8.5% thereafter means after 90 days, 8.5. Next is what? On all overdues, interest is charged at 10.5. So if something is overdue, then it is charged at 10.5. Now this much is your problem. Now we have to look at the solution. What the problem? How many parts are there? There are 4 parts to it. First, the sanctioning of the limit, right? Second, pre-shipment finance. Third, post-shipment finance and closing of pre-shipment finance. Clear? Fourth, the realization of the bill. And this fifth part is not a fifth part, but it's a description. What are the charges of that bank? Okay. But you have to pay heed to this. Now let's answer the question. What is the amount that the bank can allow as a PCL? PCL means pre-shipment credit or packing credit to the exporter against the given export order, considering profit of 10% and insurance and freight of 10%. Okay. So understand one important concept over here. Always pre-shipment is financed on FOB basis only FOB basis. Okay. So now 25% margin is kept for FOB basis. That is what is the sanction letter of that bank says. Okay, clear? Now the order is of what? Order of 50,000 CIF. CIF means what? Cost, insurance and freight. This cost part, it is a FOB part. Always remember. Cost part is FOB. After that FOB, you add this insurance, freight and also the profit. That is not given over here, but profit is always added, and then only obviously if somebody is doing the business, he won't do it for no profit, no loss. Okay. So in this 50,000, what all is included? Because this is the order which he has got, our exporter has got. So that will definitely consider the profit of his freight, insurance, or everything, right? And all the charges. Okay. So now we have to, what have we to do? We have to finance him on FOB value. Now, if I have to finance him on FOB value, I'll have to subtract all these things, profit, then insurance, then freight, everything. And then what comes is my FOB value. Okay. So let's see the problem. See this. First, I have to find the FOB value. So what is the USD amount? 50,000. What is the rate? Rate is 66.8. From where did the 66.8 came? 66.8 came from this pre-shipment rate, 66.8 for buying, selling both. What will you do over here? Are you buying or are you selling? It's an exporter. Always remember. In export, you always buy the currency. In import, you always sell the currency. Okay. But here it doesn't matter at all because rate is only given one. If it was 80, 87, then there would have been a problem. Then you would have to think whether to take 80 or 87. But if such thing is given oblique 87, then you have to consider the buy rate. Whenever you are dealing with exports, consider the buy. Whenever you are dealing with imports, consider the sell. Okay. So let's find out the INR value first. 50,000 into 66.8, that is 334 and 4 zeros, right? So something about 3 crores, 34 lakhs, something like that. Yeah. 33 lakhs, 40,000. Okay. So this is the amount of which I am getting through multiplication. But what is this? Is this the amount of pre-shipment which I will sanction? No. First, this is CIF value in rupees. Now I have to subtract this profit. Then now I have to subtract this insurance freight. Okay. And then margin also. The 25% margin. Okay. So 33 for 40,000 I'll call it. Or about 33, 40,000. Okay. minus, first I'll subtract his profit. What is the profit? Profit given is 10%. So 33 4 whatever mine into 10%. So what is this 10%? It is just remove one zero. So 33 4,000. Okay, means 3,34,000. This much is his profit. So I'll subtract this first. So from this CIF value, I'll first subtract this profit. So what remains? 3,006,000. This is the amount which is remaining after profit. Now from this amount, I'll have to subtract this insurance and freight also, because that is CIF and I want FOB. So 3,006,000, 10% of this. So 10% of this, just remove 1 0 again. So it is 3,006,000. Okay, 1 0 is gone. So this I and F, insurance and freight, is removed now. So if I subtract this, what I get? FOB value. Now I've got this FOB value. 270,5400. This is my FOB value. Got it? But can I sanction this FOB value full? No. What is given in the bank sanction letter? 25% margin. So 25% margin on this. So take 25% margin on this. It is here. 25% of this comes out to be here simple 6 4 the 24, right? Roughly 6 something it will be 6,76,350. This much is the margin. So this I'll again deduct 25% margin. So what I get? 2029050. This is the pre-shipment finance or packing credit which I'll be sanctioning him to that guy. Okay. So this is my answer. Okay. Means bank will allow a PCL of something what 2 crores, 2 lakhs, no, 20 crores, 2 crores, 2 lakhs and 90 something, whatever that figure is, 2029050. This much bank will sanction, 20 lakhs, 29,000 it is. Okay. So this much bank will sanction as a PCL. Got this case? Very important case. Okay. Second, what is the amount of post-shipment advance that can be allowed by the bank under foreign currency bills purchase, the bill submitted by the exporter? So what is the post-shipment finance? Always remember, post-shipment finance is full 100%. There is no margin to it. So 46,000, from where did this figure of 46,000 come? See this. It's given over here. The firm submitted export docs drawn on site basis for USD 46,000. So this 46,000 directly into what is the rate at that time? What was the rate? The rate is in the second slide. See this. The bank purchased the docs at 67.25. Okay. So just do this. 46,000 into 67.25. This is what you get. 30 lakhs 93,500. This much is a post shipment finance. That figure is already given. No margin, nothing to be deducted in this. Post shipment is full amount. Okay. So this much is a post shipment finance. Got it? So the bank can allow 30,93,500 as a post shipment advance under foreign bills purchased for the bill submitted by the exporter. Okay. Next, what will be the period for which the bank charges concessional interest on DP bills from the date of purchase of the bills? So concessional means they are talking of what? Post shipment finance. Okay. So concessional rate is always charged up to what period? Side bill. What did I tell you in my earlier lecture for side bills? NTP is considered 25 days. Within 25 days, the fund should come. Okay. But if they don't come, then what happens? After that, up to 1 month, means 1 month more after the end of my NTP period, then I won't give him a concessional rate. I'll give him the normal rate. Okay. And even after 1 month, if it doesn't arise, then I'll crystallize him. Okay, that's a separate part. So remember, there are 3 parts to it. Firstly, when I sanction the post shipment finance, from that it is 25 days NTP. Up to that part, I'll give him the concessional rate. Okay. So what is the answer to this? Concessional rate will be charged for NTP of 25 days, and there will be overdue interest after that. So after that, overdue interest. Okay. So in above case, so got the answer for this. This is 25 days. Next, in above case, when should the bill be crystallized? Okay. Now crystallization means what? Taking the foreign liability in INR, and this is done when the funds are not realized on the due date and even after the allowed period. So what is the allowed period? Always remember, for crystallization for side bills, this case is of side bills. For crystallization of side bills, the period allowed is NTP plus 30. NTP plus 30. So what is the NTP for this case? In our case, let's look at the problem here. When was the financing done? Post-shipment finance, 31/3/2017. See this. On 31/3/2017, I did the post-shipment finance. Then after this means I purchased the documents on this date. So NTP is on this date itself, I might have sent the document. Means my bank will send the documents to the issuing bank. So within 25 days, I must receive the funds. So 25 days from here, NTP, 31/3 plus 25, it's 24/4 something, right? So 24/4 is my NTP period, normal transit period, right? But 24/4 within that period, I must receive the funds from that foreign company. But if I don't receive, then I give 1 month more as per RBI. So 24/4 plus 1 month, 30 days. So 24/5. Up to that period, I won't crystallize the bill. I won't consider it as overdue. So crystallization will be done when the bill becomes overdue after 25 days of normal transit period. Due date of overdue will be 25/4/2017. So from here, it will be overdue. But if the bill remains overdue, it will be crystallized within 30 days. So after 25/4, 30 days, 24/5, whatever that date, 24/5. So just calculate 1 month, depending on 31 days or 30 days. Okay. So calculate that period, and 24/5 will be the date on which I'll have to crystallize. When will I crystallize this? I'll crystallize this if the funds are not received even after 30 days from NTP. It means there is some problem in that loan. So I'll crystallize it and treat it as a normal loan at that time. Okay. Even after 25/4, if within NTP the funds are not received, what do? What are my bank steps? First step is I'll remove the concessional rate after 25/4, but I won't consider it as overdue, means for crystallization. So I'll wait, but charge him at 10.5% from 25/4. Okay. And after 1 month, I'll charge him all the penals and everything. Okay. So what is the rate of interest? Will be applicable for charging the interest on the export bill at the time of realization for the days beyond the normal due date. Now see here, look at this case properly. When was this done? See this. This date was what? 31/3/2017. So NTP is what? Means this is my post-shipment finance date. So NTP is 24/4/2017, right? So up to that period, I'll charge him the concessional rates. 24/4/2017. What are the concessional rates? It's given 7%, right? See this, 7% up to 90 days. We have our finances within 90 days. So 7%. So up to 24/4, I'll charge him 7%. But is the bill realized on 24/4? No. Bill is realized when? When did the foreign guy pay me? 34. So after 24/4, how many days are there? 25, 26, 27, 28, 29, 36 days. For these 6 days, I won't charge him concessional rate. I will charge him the normal rate. See this, at 10.5 on all overdues up to 10.5. So I'll charge him overdue 10.5% for the remaining days. From 25 to 30, I'll charge him at 10.5, and up to 24/4, I'll charge him that concessional. Okay. Clear with this case? This case, you are sure to get it in exam. Some sort, either full case, or you will get it part of this case, or you will get, means there are 4 parts to this case, right? So you can get 1 and 2 combined, 1 and 3 combined, 1 and 4 combined, something like that. Or even you will get it a normal case where only you receive the funds directly. Even if you receive the funds here, there is a separate case. Here, what we have done a bill purchase. Okay, so bill rate is applicable over here. And when we do the normal funds transfer, we apply the TT rates. Always remember this. Okay, so this was the important case study for you. Again, I'll play the gist, means total summary. How many parts are there in the case? 1, sanctioning of the limits. while sanctioning the limits, what is important? First part is always sanction pre-shipment on FOB basis, always. Second, keep some margin for pre-shipment, okay? Keep this. Then second part is sanctioning is done. Second is his order. Once he gets the order, check whether the order is on CIF or FOB value. If the order is directly on FOB value, you can directly take the margin of 25% and sanction the loan. Okay. But if the order is on CIF value, first you will have to deduct the profit, the insurance, then freight. Okay. Even in FOB value, even if the order is directly on FOB value, there also you'll have to deduct that profit, because profit will be included everywhere in any order. Okay. So if you get the CIF value order, first deduct the profit, then deduct the insurance and freight, then deduct the margin, and then sanction this pre-shipment loan. Next, for post-shipment loan, what do we do? Remember, for post-shipment loan, always we do a simple thing that 100% post-shipment is sanctioned. No margins deduction, nothing. Okay, it's RBI rule basically. Then this was the third part. Fourth part is this is all the rates were given, that 67.25. If there is oblique rate given, then what will you do? If you are given the oblique rate, then one is buy, second is sell. Okay, bid and offer. So you'll put the bid rate. Okay, for whenever there is an export document, you put the buy rate. Okay, or bid rate. Then last part was about realization. Check the realization date. If it is within NTP, then concessional rates. If it is outside NTP, then from that NTP end period up to that date, charge the normal rate. But if this realization is after that 30 days from NTP, then there is a crystallization problem. Then you'll have to charge the normal rate, whatever 10.5, plus the penal interest, if any, by the bank. Okay, understand this concept. Okay? So this is for this. And what about these charges 450? So this is not the part of that problem. But if there is a problem, part of that problem, if it is asked, means after realization, what is the amount to be credited to that customer on realization? So this realization part the order will be what? 50,000 CIF. So that foreign guy will definitely pay full 50,000. So once I get full 50,000 from the customer, what will I do? First, I'll convert this 50,000 from this 50,000. First, I'll deduct my charges. I'll credit it to my account, bank's account, because these are my charges. Then after that, whatever remains, I'll adjust my packing credit loan. Post-shipment loan, because packing is already adjusted. I'll adjust my post-shipment loan, and if any interest is pending, if any charges are pending, I'll adjust that. And after that, I'll credit the remaining amount to the customer's account. Okay. So this was a full case study, and mind well, you study this again and again and again. You will definitely get one case study of such sort in your exam. Okay. So that was the concern. That was the theme for today. Again, I'll tell you the same thing. Use this code Y432 to join the paid batches of CAIIB and JAIIB. Also remember, this was just one case study which I took. On the live classes, I take almost 15 to 20 case studies like this, which are very important. Okay, and more difficult than these which you get in the exams. So join the live classes, join the paid classes, because after all, 77% discount. It's a huge amount. Okay, so you get almost for 1/4. You are getting this. Okay, almost. So you can use this. I would suggest you to share with your friends also, share with all your social medias groups, so that everyone gains it and this paper is easy for you. Okay, so I'll take the leave. Thanks.